What's up, YouTube? Welcome back to another video. So for today's video, we're going to be going over the strategy that has gotten me from 0 to 50K in a month trading with one prop firm. And that one prop firm is Top Step. Now, before we actually get into my actual strategy, I want to show you guys some proof that I actually earned this money and, talk a little bit to you guys and tell you how I was able to do this. So I'm going on the Chase app right now and I'm about to show you guys my income for February 2025, which was my, hold on, just clicked one of the payouts by accident. All right. Show you my biggest month, which was in February 2025, $48,818.72. Income transactions, as you can see right there. Now, with that being said, I wanted to talk to you about people maybe having some doubts about, if they can really do this and if this is like actually possible. I just wanted to say that I was in your guys' shoes too, right? When I first started trading, I actually didn't even think I would make any money at all. And honestly, it just felt like impossible. I really didn't know what I was doing, and it was a long, grueling process to get to this point. I know it's worse for other traders, but for me personally, I was able to get profitable within a year, like 11 to 12 months. I guess you could say like fully profitable. But for me, I guess my circumstances were a little bit different. I got my first actual payout 4 months into trading, but I still wasn't net positive, so I didn't consider myself profitable. So I started trading in September 2023, and then in January 2024 is when I got my first payout for like $1,000, but I was already like 6 or 7K in debt. Well, not in actual debt, but in debt to Top Step, right? So I spent like 6 to 7K on evaluations and blowing accounts. And in January, I got my first actual payout. But what I wanted to say is that everybody's journey is different. And if you're in a spot right now where you think it's impossible and you cannot make money, you can make money. You just have to, if you don't quit at something, it's going to work out. If you're consistent at something, it's going to work out at some point. Now, you can watch all of my other YouTube videos. If you still need more proof of me making money, I've withdrawn well over $200,000 in profit, not in profits, but in payouts from Top Step alone. I literally have my tax statement shown on one YouTube video in one of my earlier YouTube videos. You can go and see that. I have all my payouts, most of my payouts posted on TikTok, on Instagram. So I'll drop those in the description. You can go check it out. But I'm not showing this amount to flex on you guys. I couldn't care less. If I wanted to flex, I'd show you guys the lifestyle. I'd show you guys cars, some fancy cars, but I have none of that. I'm 19 years old. I go to college. I trade, and I invest my money. All the money that I get from trading with Top Step, that is reinvested so I can enjoy my money longer, and I just don't need to make stupid decisions right now. So yeah, if you guys want to go check out some lifestyle YouTubers, there's tons of trading lifestyle content creators out there on YouTube, so go check them out. There's no need for me to be another lifestyle content creator. There's plenty of them out there. So yeah, without further ado, let's actually get into the strategy and show you guys how I actually trade. All right, so even before getting into the charts, we're gonna go over my type of trading. So I trade a continuation strategy, a continuation model, where I'm catching like the last leg to my drawn liquidity that I pick out. So what does this consist of, right? So let's first start with my targets, okay? I target swing highs and lows, session highs and lows, unfilled high time frame fair value gaps. These are the three things that I target, all right? And let's actually just draw out how it looks like, okay? The main thing is draw on liquidity, okay? I prioritize draw on liquidity. Prioritize DOL, okay? Without draw on liquidity, my strategy is literally nothing. So there's two types of ways that I trade a continuation. One of them is where I'm catching the last leg to my draw on liquidity, right? So right here, we have this high right here. So let this high be my draw on liquidity, all right? And then we have now an uptrend, okay? So what I'm actually catching is the last leg to this draw on liquidity, right? So this is my DOL right here. And this can be a swing high, a session high or low, or an unfilled high time frame fair value gap. Now I'll show you guys some in-chart examples, but I want you guys to actually kind of visualize this first before I actually hop on the charts and show you guys. So right here, right? Let's go over my entry points actually before that. Let's go over my entry points really quick. Entries. So 1, inverse fair value gaps. 2, reaction off fair value gaps, right? So this can be the main fair value gaps that I look for is on like the mid time frame or the lower time frame. So it can be anywhere between the 1 minute time frame to the 15-minute time frame. So I'm looking for a reaction off of any of these fair value gaps in within this time frame. And basically the way I trade is discretionary. So I'm not going to specifically look at one time frame and like let's say the 5-minute, for example. I'm not going to specifically look at the 5-minute time frame and see if there are 5-minute fair value gaps and see price wanting to retrace into a 5-minute fair value gap, and then we have to get a inverse fair value gap, right? It doesn't always need to be an inverse fair value gap. So I play it by sight, basically. I know that's a little weird to say, but one thing that you can't teach, that nobody will teach, is market experience, right? Because you literally cannot teach that. It is the amount of time that you spend watching the charts. So I've spent well over a year and like 10 months now, like literally almost a year and 10 months. I've spent like a year and 10 months just looking at the charts and understanding and realizing what works and what doesn't work. So when people say market intuition, or if you've ever heard that, yes, that is a real thing. But obviously, market intuition doesn't mean anything if you don't have some criteria built over it. And that is the beauty of discretionary trading, where you're able to tell what works and what doesn't work, and you're not really sticking to one like set model. Anyways, third thing, third entry would be, well, I don't even know if it's like actually a third entry because this kind of goes with the reaction off the fair value gaps, but it's displacement, right? So after I get a reaction off of a fair value gap in any of these time frames, I'm looking for a displacing candle off of the reaction that, you know, validates this reaction, right? So I need a displacing candle close, and that will be one of my entries if there is no inverse fair value gap present. Now, let's look at it in this example that I drew up right here, right? So we have this fair value gap right here. Let's say this is a bearish fair value gap. We see price invert it, right? Price inverts this, and I'll take my entry off of the inverse, and then my stop will be at the low of the fair value gap that it reacted off, right? So we'll have, let's say, a higher time frame fair value gap right here. So, well, not like a higher time frame like 1 hour or 4 hour. I'm talking like a 5-minute fair value gap, right? So let's say this is just a 5-minute fair value gap. It's a bullish fair value gap, and price rejects off of it, and then we drop down to, let's say, the 1 minute, right? The 1 minute time frame. So this is a 1 minute fair value gap, right? And then that becomes an 1 minute inverse fair value gap right here. So we react off of the 5-minute fair value gap, and then we drop down to the 1 minute time frame to see if there's any fair value gaps in this leg down that has retraced into the 5-minute fair value gap. I look for the highest time frame fair value gap in this leg down to get inverse. So it needs to be a singular fair value gap in the leg, right, in the leg down, and it needs to have a nice, clean, displacing close. Or if there is no fair value gaps created on the leg down, I just need a nice reaction off of the 5-minute fair value gap on the 1-minute time frame, or the 2-minute time frame, or the 3-minute time frame. I just need a nice displacing candle that shows that we're going to go higher to this strong liquidity. So this is my entry right here. I put my stop at the low right here. I don't know why it's negative RR, but it's supposed to be a little bit higher than that. This is your drawn liquidity, right? Right here. And yeah, that's basically it. And then I go break even at the internal high right here. So break even at the internal high. And yeah, that's basically what it looks like for a bullish case scenario. Now, for a bearish case scenario, it's literally the same thing, but inverted, okay? So you have your drawn liquidity, which is that first point right here. And then you're going to be now in a downtrend, right? Boom, boom. So my drawn liquidity is right here, DOL. And then where is my entry? Okay, well, we have a fair value gap right here, a lower time frame fair value gap right here, right? And then let's do something like this. Let's do something like this actually, because this will be our internal low that we go break even at, right? So we have this fair value gap right here that gets inverted with displacement, and boom, entry right here, stop right here at the point where price rejects off of on like a 5-minute time frame, 15-minute time frame. Let's say this is a 15-minute fair value gap right here, all right? 15-minute fair value gap, boom, right here, right here. So price is rejecting off the 15-minute fair value gap, and then you drop down to the 1 minute again, let's say for example, and then you get a 1-minute inverse fair value gap right here. Boom, take your entry, and then drawn liquidity. What is this drawn liquidity? Okay, session lows, session highs. So this can be London lows, this can be Asia lows, this can be a random swing high, a random swing low, or this can be some sort of unfilled high time frame fair value gap on the hourly time frame or the 4-hour time frame. So this is a bearish case scenario, and this is a bullish case scenario, right? I'm looking for displacement, or I'm looking for an inverse fair value gap. One of those things. Now, this is my break-even point right here, because this is an internal low. Yeah. Now, this is one of the things that I trade. Now, there's also another way that I trade, which is a little bit more rare, but you can think of it kind of as support and resistance almost, I guess you could say. It kind of looks a little bit similar, but I'll show you guys one example of that after I erase all of this stuff, and show you guys an in-chart example of that as well. So give me a second to delete all of this really quick. All right, cool. So now for this term of trading style, or this style of trading, basically you'll have, still a high time frame drawn liquidity, which is this point right here. But the thing is, price is going to be ranging, right? We're going to be ranging a little bit. We're going to be in consolidation, and price doesn't really know what to pick, okay? And what we're looking for is a breakout. We're looking for a breakout of this consolidation right here, and then a retest, I guess you could say, to the drawn liquidity. Okay, so this is the drawn liquidity right here, and then we're looking for a retest to the drawn liquidity, which is right here, to take to your target. So what are we identifying? Okay, we're identifying a range high, and then we're identifying a range low, right, in this consolidation. So right here is our range high, And then right here is our range low. So this can be all three of those drawings can be applied to literally any time frame, right? You can trade a continuation model on a higher time frame, on a lower time frame. You can trade this on a lower time frame. You can trade this on a higher time frame. It doesn't really matter because all time frames are fractal, right? So all of this can be applied on any single time frame. It doesn't really matter. But what matters the most is your drawn liquidity. Now, we see price has broken out of this range high with a nice displacing candle right here. Actually, let me make this a little bit more clear. So price breaks out of the range right here. We get a nice displacing close above this range high. And then now we're looking for a retest, which is just a retracement back into this zone right here. It doesn't need to be in the zone, but usually when you get a displacing candle that breaks out of the range high, you get a fair value gap that's created. So instead of looking for a retest back into this zone, my entry would actually be on the fair value gap that's created. So we'll draw a fair value gap, right? Actually, let's draw a fair value gap a little bit lower, like right here, okay? So we have our fair value gap right here. And what I like to do is I actually just set limit orders on this. So I'll set a limit order on the top of the fair value gap, and then my stop will be at the bottom right here, and then boom, I'm targeting the drawn liquidity. Let me draw this a little bit higher really quick. All right, boom. That's my target. My stop is right below the candle that broke out of this range high, and then this is my drawn liquidity. Let me move all of this stuff up right here. Boom, there we go. All right, so we get a breakout of the range high, retest, entry, limit order at this high time frame, or not high time frame, at this fair value gap right here, and then we target our drawn liquidity, which is again swing high, swing low, session high, session low, unfilled high time frame fair value gap. Now for a bearish case scenario, it's literally flipped once again, right? So let me erase this really quick and show you guys what I'm talking about. All right, okay. All right, so this is my drawn liquidity again, this point right here. Consolidation, consolidation, consolidation. All right here. This is my breakout point, and then retest, and then boom. Take that last leg to your drawn liquidity right here. This is your drawn liquidity, and then this will be your range high, this will be your range low, right? So range high right here, and then range low right here. All right, so once again, I'm looking for a nice displacing close below the range low, right? And then I look for a retest into a fair value gap that is created off of this displacing candle, right, or candles. And then I set a limit order on the fair value gap that was created. So literally the exact opposite of the bullish case scenario, where instead I'm targeting lower, and then my stop is right above the candle, the displacing candle, right? So I guess this is the displacing candle, right? So that's basically the two models that I trade. I guess you could say models, whatever. There's still a continuation either way. It's just different ways to look at it, right? You have a consolidation type situation, and then you just have a trend type situation, right? So now let's get into examples of this right now. Let me delete all of this. Okay, examples, here we go. Hold on one second. All right, let's go into replay mode for this one. So this one is a little bit unique because we are at all-time highs in this situation. So I just want to tell you guys, when you're in all-time highs, you really just want to this long, right? Because you don't know how long or how far all-time highs can go. But let me just break this down to you really quick, right? So as you can see, we're clearly bullish, right? We're identifying a trend. What is the trend? We're clearly bullish, right? We have all-time highs right here. This is all-time highs. We're respecting off of a 4-hour gap right here, and we're just going to go higher, right? It's pretty self-explanatory. I don't need to explain much. I talk about this in my trade recaps as well. I go over all of my trades, so you can also go back to my trade recaps and learn from there. But let's go now into market open. So we displace higher right here. We consolidate a little bit, and then boom, we have a retracement. Go to the 5-minute. Okay, cool. We have a 5-minute fair value gap right here. Well, look at this rejection. Wow, what a nice rejection that we get out of the 5-minute time frame. Okay, now we need some sort of validation candle to get our entry. So let's see if we get that validation candle or that displacement candle or that inverse fair value gap. So right here we see we have one fair value gap right here, another fair value gap right here, and a potential other fair value gap that's created in this 1-minute time frame. Now, looking at this, we can probably go up a time frame and see that, oh, look, now there's one singular time frame, one singular, fuck, I can't talk, fuck. All right, my bad. There is one singular fair value gap that's created in this move down, right? Right here, boom. We are looking for this fair value gap to get inverse pretty nicely to take an entry higher. So let's see if we get that. Okay, we see a reaction now. Okay, a displacing candle, but we need to look for some confirmation still. Look at the 2-minute time frame. Okay, we see that we're wicking right now, and this candle actually doesn't even close above it, but it would have, right? It would have closed, but it didn't close. So we were close to closing above it, but we didn't, and we closed within this 2-minute fair value gap. Now, the old me would wait for another close for this 2-minute fair value gap, but I'll show you guys what I took instead. I went over this in my trade recap as well. So we get a rejection right here, boom, rejection, and then we see right here we have this 1-minute fair value gap right here that opens up. Okay, let me remove this real quick. It's kind of confusing. So we have this 1-minute fair value gap that opens up, and basically this should hold if we're still bullish, right? Because on the 5-minute, we are in this 5-minute fair value gap. We rejected off of it, and we should see all bullish fair value gaps hold if we want to continue higher. So we get a nice reaction, a very nice reaction off of this fair value gap. And instead of waiting for that 2-minute candle to close above this fair value gap, I use my discretion, right? Because of my market experience throughout the last almost 2 years, where I know that if this holds, I'm willing to take a long to the next high, which is right here. Or in this case, I actually held a little bit longer to 23K. That's because of psychological levels. That's something else. But we get a reaction right here. And then my entry was in real time was right here after that candle close, and then my stop is at the bodies, or it can be at the swing low. That doesn't really matter. But when the wicks are usually long, I usually put them at the bodies, because if we go all the way here, my trade idea is basically invalidated, since we're going to inverse this bullish fair value gap. And if there's displacement lower, then even if I put it at this low, we're probably going to go and take out this low anyway, right? So I might as well put it at the body to risk less. But I don't put it at the body every single time, right? There's different scenarios. So that's my entry right here, and then boom, TP hits, right? My break-even point is at this internal high right here, break even, boom, and then I'm targeting that psychological level of 23,000. Okay, this is a little bit unique because in all-time highs, there isn't really like a specific target, because you are literally targeting thin air, and this is thin air. But there's different ways to trade all-time highs, And this is one way to trade all-time high, which is literally just longing everything and targeting a little bit above the structured high that is presented, right? Now, let's go into the next trade that I took really quick. Actually, I don't even need to remove all that. Let's just go to the next trade. 15-minute time frame. Okay. I think, is this it? Yeah, okay, cool. This is it. All right, here we go. 5-minute time frame for this one. Okay. Let's go to 9:35, okay? Boom. All right, so on this day, Powell was speaking, so price was a little bit choppy right here. But we're looking for a little bit of a breakout, right? Where will we get a breakout? Okay, we have a breakout right here out of this range. We get a nice close above, this high right here. And actually, it was like a false breakout, right? We literally had two breakouts. Because technically, starting from 9:30 right here, we have this low right here, and then this is your range low, this is your range high, boom. We break lower, but we don't see a follow through, right? There is no follow through. So we're not going to take anything lower. And over here, there is no follow through either. So there's nothing to take. We just end up chopping, right? Swing high, swing low, chop. Or range high, range low, chop. Okay? But let's go to the higher time frames and see what we have. So on the 5-minute, all right, cool. We see that we are rejecting off of this 5-minute gap right here. Now we're looking for our drawn liquidities. Okay, let's go to the hourly time frame. Cool. We have London high that's marked out right here, which is within this fair value gap right here, and it is a swing high. That's perfect. That looks like a good target. But we need to see some confirmation. So what is that confirmation? Okay, right here. We're in this 5-minute fair value gap, so we have to see if this 5-minute rejects. Does it reject? Yes, we have this nice displacing candle off of a retest of this 5-minute fair value gap. So my stop is at this swing low, or the low that tapped into the 5-minute fair value gap, and then I'm targeting London highs, and then my break-even point is at these equal highs, or this internal high right here. So this is where I go break even. And this trade doesn't end up playing out because we actually formed a SMT with ES, where ES took out this London high and NQ didn't, which is why we rejected, and I ended up getting break even on this trade. Now, it happens, right? You're not going to win every trade, and this is just an example of a trade that I took that ended up getting break even, but it was still a good setup, right? And it fit my model. Let's go into another trade that I took really quick. I think this next trade that I drew out is actually part of the, so this is actually part of the continuation or the breakout strategy. I guess you could say the support and resistance type strategy. So for this right here, this was in Asia session. I don't stick to just New York session. I recommend you guys should just stick to New York session if you're just starting out, because usually Asia session is pretty ass. There is no volatility. But recently there has been pretty nice volatility, and I was able to take advantage of that in like the last month. But anyways, let's go and break down this trade. So I'm not even going to go away from the 15-minute time frame on this one. So this was more a little bit of a swing trade that I took. And basically we had some big war news that happened where Iran attacked Israel. So Iran attacked Israel, and oh fuck, my bad. The US dropped bombs on Israel's missile bases or whatever, all right? They dropped like airstrikes on their nuclear bases. And basically Asia opened pretty low. So Asia opened low, and then we got a nice rebound, and that created a big new week opening gap right here. Now, a new week opening gap is literally what it sounds like. On Sunday, price opens with a gap, literally a gap like this, right? Usually it's not this big, but there will be a gap between the closing candlestick on Friday and the opening candlestick on Sunday in Asia session. So usually these gaps get filled, and that's what I was looking for. Now, on the 15-minute time frame, we see this range high formed right here, range high, and then we have this range low right here. Now, since I want to see this gap get filled, I'm more bullish and I want to see a displacing candle close above this range high. So on the 15-minute time frame, boom, what do we get? A 15-minute candle close above this range high right here. And then boom, what do we get again? A 15-minute fair value gap right here. So I set a limit order after this, after I see another 15 minutes go by and we form this fair value gap. And then I put a limit order at the top of the 15-minute fair value gap, and then my stop is at the candle low, right? So whatever low this candle formed, that's my stop loss. So, and it's also below this fair value gap. So we get a retest into this 15-minute fair value gap, and then boom, price just rips and takes out and fills the new week opening gap right here. So that's an example of the I guess support and resistance type model. Yeah, let's go on to the next trade now. Okay, so let's go all the way back to 9:30, or actually, yes, no, Asia open. Yeah. So this is another Asia trade. All right. So what do we have right here? Hourly time frame. We have this hourly swing high inside of this hourly fair value gap right here. What a great target. Now we're looking for some displacement to this high right here that we marked out, which is that hourly high. So we see Asia opens pretty strong, right? We see this strong open right here, and then we don't see any sort of like validation that we're going to go lower, right? Because we do have this new day opening gap, which is the same thing as a new week opening gap. It's just from Thursday to Friday. Like in between days, you'll get a gap that opens, right? Just like blank space. And usually they get filled. But if I want to target that on the same day, I want to see something lower, right? To like some continuation lower to fill this gap, which we didn't end up getting. But this is also kind of another example of a little consolidation situation that we're seeing right here, right? We displace higher, we see a little bit of consolidation, and then now we need some confirmation. What is that confirmation? All right, cool. We break out of this range that we're in. So we have this range high right here, range high, and then we have, I guess right here you could say is the range low. We have this range low right here. Boom. Now we get a nice displacing candle out of it, but I was waiting for a little bit more confirmation to this high, which is literally just a retrace off of a fair value gap, which is what we get right here. Boom, we have this 1 minute fair value gap right here. We retrace into it, and then we get a nice displacing candle close right here. And then where is my stop? Okay, at the low that retrace into this fair value gap. And we're really close to that target right here. We're really close to that swing high right here. And we've already seen that we've created another fair value gap right here, and we see a rejection off of it, and then boom, we get a displacing close right here. And then another fair value gap rejection, boom, displacing candle close right here. But this time, this displacing candle close is reasonable, right? It's not, because like there's a point where I can go break even at, which is this internal high right here. So I have a point to go break even at. Now, you may be asking, okay, well, why didn't I take an entry like over here? Well, where would I go break even at, right? I need a place to protect myself. And this is a entry where I can still protect myself in case we wick this and then go lower to my entry point, and then I won't be taking a loss. So that's my entry. And then you see it plays out. Boom, we take out the high. That's it. Let's see if I marked out another example. Okay, yeah, this is the last example that I marked out right here. This is actually one of like the best days in a long time. So this is probably the clearest example, actually. We'll go through this one right here. So if we actually start from the hourly time frame, you see that we have this hourly gap right here. We're clearly bullish, right? If we go to the 4-hour time frame, you see that price is trending higher and higher, right? These candles right here, we're trending higher, and then we're respecting gaps. So we take out internal liquidity right here and right here inside of this hourly gap, and we're rejecting higher, right? So we have this target right here, which is this swing high inside of an hourly fair value gap right here. Boom, that's our target. So what are we looking for? Okay, we see displacement, or we see a reaction out of this hourly fair value gap, but there isn't really entry in anything right here because there's no retrace, all right? But we do get a retrace right here into a 5-minute fair value gap right here. And we want to see a reaction out of this 5-minute fair value gap. Right about, right? So now we're in this 5-minute fair value gap. Now we want to see some sort of reaction out of it on the 1-minute time frame. Okay, what do we get? Boom. Beautiful candle right here. This is a nice displacing candle that also inverts this little 1-minute fair value gap right here, if you can see. So you basically get the best of both worlds. You get a fair value gap that's created that gets inverted. You get a nice displacing close. And then where is your break-even point? My break-even point is right here. And then I'm targeting that swing high all the way over here. So play out the candles. We take this out, and then we almost get break-even, but then we end up going out and taking out this swing high. So those were 5 examples of how I trade and what I look for when I trade. Hopefully this long ass video was able to help you guys. Holy shit, 37-minute long video. But yeah, this is exactly how I trade. So go ahead and back test this. Go ahead and apply this in the live markets. Let me know if you guys have any questions down below in the comment section. And if you're already not in my Discord, go ahead and join that. I do live streams every Monday and Friday for free. And Tuesday through Thursday, I drop my analysis in an analysis tab so you guys can see what I'm targeting for the day, all my drawn liquidities, all of that good stuff. But yeah, I hope you guys were able to learn something from this video, and I will see you guys in the next video.